All right, thank you everyone for your patience. We were just kind of wrapping up a few technical stuff before we were able to get started, but we are happy to welcome you to today's webinar, and I've got a couple of housekeeping slides and some announcements, so we will go into those while everyone is getting comfortable for this webinar. Today's webinar is being recorded, so if you are only able to attend for a portion of the webinar, we will be sending that to your inbox within 24 hours, so keep an eye out for that link. You are also able to use the Q&A box that's in your Zoom toolbar. So if you have any questions throughout today, we do have a representative from the Giving Block with us who will be answering your questions. And then if we have a few minutes at the end of today, you can also chat some in, and Pat or Don will be available to answer those when we get to the end of our slides for today. It is my pleasure to introduce today's speakers. Pat Duffy is a co-founder of the Giving Block alongside Alex Wilson, and together they develop leading solutions that charities, universities, and other nonprofits use to fundraise cryptocurrencies like Bitcoin. We are also thrilled to welcome Nicholas Hedenkamp, and he serves as an insight consultant at Pursuant and leverages data and analytics to provide fundraising insights to our clients. Last but not least, with nearly a decade in the nonprofit technology space, Dawn Galasso specializes in providing clients with the best and most innovative products available in the ever-changing philanthropy space. And she will be chiming in to talk about a couple of technology solutions towards the end of today's presentation. We wanted to throw this announcement out. If anybody is going to be attending Bridge in 2 weeks in Maryland, we would love to see you. Both Pursuant and GivingDNA and the Giving Block will be there, and we have our booth numbers right there on the screen for you. We will also be presenting 3 sessions at Bridge, and you can see there we've got a couple from our team, and Pat will also be presenting on this similar topic as today. And so if you will be attending that conference, please come by and say hi. We would love to put a face to a name. All right, so I'm going to kick things over to Nicholas now. He's going to kind of give us an overview of today's presentation, and he will introduce Pat, who is the star of today's presentation.
Thanks, Leah. This is a quick overview of what we'll be discussing today. So we reserved 40 minutes to cover the following points, with 5 minutes for Q&A at the end. You can use the Q&A panel in the Zoom toolbar to ask questions at any time. So let's get started. So Pat, we'll just move on to the first question we have here for you. Can you just share with our audience an overview of what cryptocurrency is?
Yeah, absolutely. So fundamentally, like the best way to answer the question is kind of what does it do, so that people are willing to kind of invest in it to begin with, or to use it to transact. The main things that it solved are 2 problems primarily. One is it's a digital asset that exists on a blockchain, and you can't pretty much put more units into any individual system. So for something like a Bitcoin, there's a set number that will ever exist. It's written into source code, and you can never alter the ultimate number that will exist within that ecosystem. So similar to something like gold, where there's scarcity baked in, it's like a predictable degree of scarcity. So it's the first asset type where there is a fully predictable set number of units that can be dependent upon. And then the second thing that it does is you can't alter transaction records. So you would have to be in control of more than half the computers involved in a network at any given point in time. In order to change even one transaction record, that's impossible just due to scale, at least, before we have something like quantum computing, maybe. So the idea there is, hundreds of billions of dollars in fines for banks and other financial institutions on an annual basis because they can cook the books, or say money existed where it didn't exist, or say a transaction occurred. Cryptocurrencies that use blockchain can dependably tell you for any unit of Bitcoin you're holding, the exact time it originated and every wallet it's ever been through with 100% accuracy. So for people trying to move funds from position A to position B, or for people who are trying to store value in a way that is dependable and liquid, cryptocurrency has some functionality that other asset types don't have, which is why a lot more capital has been going into it.
Great, thank you. So just moving on to our next point, what are some helpful things to know about crypto?
Yeah, actually, can we jump back to the next slide, or the slide before this? Just based on the prompt, I was answering the what is crypto part, but just for a quick run through on the ecosystem overview. There's about 300 million people is the estimate who are using cryptocurrency. It's at a level of scale I think most people who are outside of it don't necessarily understand. Coinbase, for instance, has twice as many users as Fidelity for kind of context and how much capital is in it, how many people are using it. Very large ecosystem, young user base for the most part, but hedge funds, institutions over the last couple of years in particular have been diversifying into it. More companies have it on their balance sheet. That's kind of what the ecosystem looks like currently. And then for the market, it's important to note just because nonprofits, right? The long-term cap gains implications of it. If you bought Bitcoin, for instance, 2 years ago, it would be up something like 100%. It would have doubled. I think it was around $10,000 2 years ago. Today it's at like 20. So when people look at donation volume, why there's so much activity, despite the fact that we've seen literally from the all-time high a 70% correction in the value of something like Bitcoin, it doesn't mean that everyone bought at the top of that. So kind of explaining the volatility in that market, it's ultimately led to crypto being the best performing asset class of the last 10 years and the last 5 years, despite the 70% correction from the top. It's still outpaced every other asset class, which is a lot of the tax incentivization that drives the giving.
Thank you.
And then,
yeah. So if you want to go ahead and just speak to some stats around it, that would be great.
Yeah, there's kind of a segmentation between nonprofits accepting crypto and then nonprofits fundraising it. Those things look a little bit different. In terms of nonprofits accepting it on our platform, we have a little over 2,000. Examples of orgs, we will use kind of notable ones, even though the majority of groups we work with are small and mid-sized. We have about 150 who are budgets of $100 million or more. That's their annual budget, not their crypto revenue. And then a couple dozen, like $1 billion plus. But like universities we serve would be like University of Arizona, Alabama, UNC, Maryland. For nonprofits, Save the Children, United Way Worldwide, Save St. Jude, World Vision, faith-based groups. We have a bunch of Jewish community foundations. We have most of the major Catholic organizations who are accepting it. And then we have a bunch of kind of like hospital networks and those alternative types of 501c3s that accept it as well. But yeah, about 2,000 on our platform. It's tough to gauge how many are out there outside of that. Maybe somewhere between 2,000 and 3,000 who have it as like a prominent way to give, where you can actually kind of discoverably see that they accept it. For historical stats around it, like for just us and Fidelity Charitable, which is the folks who have kind of public reporting on donation volume. Last year, 2021, there was a little over $400 million in donation volume. This year, hopefully, we'd like to see over $1 billion in the ecosystem that we can at least count on, but there's just a lot of decentralized gift acceptance. So it's tough to kind of get a gauge for it. 2017 was the first big wave of crypto giving for sure. When Bitcoin first spiked and ran up to 20,000, I think that was kind of the first wave of tax literacy for users, kind of coupled at the same time. About $200 million or so we saw in like a 3-week period during that run up. But yeah, historically, and now moving forward, I would assume the ecosystem at large would be like $1 billion, maybe slightly over that. And then projections on where that goes. It's multivariate, but there's a tax literacy gap for users, which is a good problem to have in terms of the upside. It's not a great problem to have currently, just because there's a lot of untapped capital. Most people who give non-cash are usually older with advisors, and they have a level of literacy that helps them plan and prep and do certain things. Crypto user base is 94% millennials and Gen Zs. So there's still a big wave of tax literacy, people knowing they can give non-cash to offset tax burdens. The more that happens, the more we'll unlock the giving. And then the other big variable is nonprofits actively fundraising it. So there's still a tendency for nonprofits to add like a crypto acceptance option and sit it there like it's credit cards versus kind of publicizing that they accept crypto and engaging with this community. the more big brands, like I Save the Children with 2 million followers on Twitter, who like really actively fundraises crypto, that drives a lot of additional activity, corporate partnerships, which drives up the overall volume. So nonprofit sector adoption, and then crypto user tax literacy. I'd say are the two biggest barriers to unlock, multi-billion-dollar donation area.
Great. So just moving forward, crypto definitely is commonly misunderstood, which gives rise to a lot of myths. Can you speak to some of those myths today, and maybe make us understand them a little bit better?
Yeah, I'll start on the left side here. Crypto being only for experts. This is just common with any new technology. I think of that famous YouTube video, right? I think it was Good Day, something like that, one of those morning shows. And they're like, what is internet anyway? And they're like arguing about it, like trying to figure out what it is. When you go back, you listen to the question, it makes everyone laugh. But if you listen to what they're saying, it's like, I still don't have the answers to some of those questions. A lot of folks don't. There's a false literacy gap that people think they need to cross, kind of how blockchain works fundamentally at a technical level, where for things like Wi-Fi, Bluetooth, even like the engine in your car, like most people don't really fundamentally understand like the engineering behind things, but they understand how to interface with them, the utility that having a smartphone provides, not necessarily how it's assembled. That needs to still happen for crypto. A lot of that is crypto people's fault because they love showing you how big their brain is and explaining like really deep technical stuff around mining. I think eventually they won't be as bright and shiny people that you can put up on a stage and they can explain DAOs for 40 minutes. And when that stops, I think people will be more comfortable. Environmental impact comes from just a misconception around blocks and individual transactions. A block is just a bundled giant pile of transactions that get approved by these mining rigs at the same time. The reporting on that just confuses a block and a transaction is like the main driver of a lot of the misconceptions around it. Is crypto environmentally friendly? No, it's pretty comparable to traditional financial systems. So the argument there, I think, is like if you're willing to take credit cards with just like the infinite skyscrapers and commuters required to authorize transactions, crypto is reasonably similar, but the bet on crypto to become more scalable, because all it needs is code that needs to get more efficient, is a better bet than thinking skyscrapers and cars are going to catch up faster. Accepting is investing. This is a huge one. Nonprofits are like afraid of the volatility, which leads to the bullet under it. Accepting crypto is not investing in it. It's very similar to if you accepted a share of, Exxon stock, or I guess that's a bad environmental example, but like Ford or Facebook, whatever it might be. If you get a share of that, it doesn't mean you're placing a bet on that company. You would almost always liquidate it immediately, and then the US dollars would go toward your mission. Crypto is the same thing. Very rarely do nonprofits hold crypto. And when they do, it has nothing to do with the crypto they're accepting. They usually just accept crypto that liquidates. And then if they have an endowment they're diversifying into, they do that deliberately. They have X amount of dollars they're going to invest. They're going to take some dollars and buy some crypto. They're not just going to hold the stuff that people give to them. So you don't need to have any exposure. So like the way we do it, it automatically sells for US dollars. Volatility is not your friend. Volatility is your friend. If you are a nonprofit, you want as big of a difference between the price someone bought their non-cash asset at and the price that they are donating it to you at. If it goes down very aggressively and up very aggressively, if it has bear markets where the price gets suppressed for a while, people buy all throughout those periods. And ultimately, if Bitcoin, for instance, remained flat or even up slightly over the course of a year, anyone who bought during that year wouldn't have a very significant incentive to give to you. But something like crypto that goes down a lot and up a lot, but over time continues to appreciate, means anyone who's buying in those down periods, that's the crypto that they ultimately donate. The biggest delta between when they buy and when they give, that's their tax incentive. If I bought it for $1 and it's worth $1 million, I'm a hell of a lot more incentivized to donate using that tool than I would be if I bought it at 900 grand. Exclusive, crypto is exclusive to young men in their 20s. Yeah, this is no longer the case. It's something like 65% male, I think, at this point. So it's starting to reach parity. And the majority of crypto wealth is actually held by baby boomers and Gen X, which is funny because 94% of the folks who use it are younger. It's just baby boomers and Gen X, these companies, these institutional players, they have so much capital that even when they move, 2% of a hedge fund into Bitcoin, which is happening more, like it's so much money. It makes up, a zillion Zoomers in their basements. And then anonymity. Accepting anonymous crypto donations is optional. You can do it. You can let people send you a donation without having them fill out a donation form. You can also just collect their information before you give them the wallet address they give to. So a lot of nonprofits do accept anonymous crypto gifts because it's more commonplace for the donor experience. But it's totally up to each individual nonprofit.
All right, thank you for addressing those issues. So just moving on to the next point, can you explain the recent crash in crypto and what happened and what do you think may happen in the future?
Yeah, we've been through a bunch of these. I know it's too small to be legible on there, but these are like 30% plus price corrections in crypto. That means it comes down 30% from an all-time high. Over the last 5 years, crypto is the best performing asset class. Over the last 10 years, it's the best performing asset class. That just means if you bought it, 5 years ago, has it gone up more than anything else you could have bought then? The answer is yes. Bought it 10 years, same thing. Over any multi-year period, for the most part, crypto outperforms everything. However, very jaggedy, up and down. Lots of volatility and price movement. Part of that is just because it's still relatively nascent. There's a lot more than 300 million people in the stock market, which has stabilizing forces. And then a lot more institutional capital. People have $1 billion who can park it there and kind of act as an anchor. But the long and short of it is it's still a relatively nascent asset class. People who are in it, who have been holding it for a while, have experienced this. But for us as a company, we started in 2018. We've experienced maybe half a dozen of these bear markets or price corrections. Generally speaking, right after a bear market is usually when there's the most price action, just because people bought it lower than the value they're donating at. And then we usually actually end up seeing a tapering off of giving if we get consistent upward movement for too long, just for psychological reasons. Pretty much people who have crypto that's going up every day don't want to donate it because they assume their donation will be worth more tomorrow. So you'll actually see people tighten up if you have consistent growth without downward movements. So it's led to some volatility in how frequently the donations come through. It definitely ebbs and flows, but over time, that volatility drives a lot more giving than it would if it was just kind of consistent and steady like other asset classes.
Okay. So can you explain why some investors remain bullish to this idea?
Yeah, I mean, because we've been here so many times. It's very funny. Like my folks, I'm at my grandparents' house right now, and anytime crypto goes down, they're like, "We really dodged a bullet," which is just a loss aversion thing. People have a really tough time. Like if I give you, $1 and it goes up 50%, or I give you $1 and it goes up to $10, and it loses 80% of its value. Like, which thing would you prefer? It's like people have a really tough time understanding that like $2, it's like 33% more money, and you should probably take that other option. In short, we just looked at that chart of all of those dumps in price. All of those occurred over this multi-year period that you see on the chart here. People who have been buying crypto through those periods, this is what they're up on their investment. It would be adjusted now because the last time I made this graphic is in May. But despite that, they're still up dramatically, right? So for like May of 2020, for instance, at this point, July, you'd be up a little over 200% or something to that effect. And you would walk these numbers back. They've pretty much been there before. You'll see on crypto Twitter, the diamond hands and the laser eyes and the HODL, which is a misspelling of hold, like hodl. There's like almost like a PTSD in this community from all of the market volatility they've written out. But the folks who've been doing it for a while have obviously reaped the rewards of their consistency. That is not financial advice. It doesn't mean things will always go up or in any predictable pattern, but we've just seen these corrections, a couple dozen times. And then the end result has always been that it outperforms everything else that we're investing in. So people are kind of getting used to that volatility and understanding that as people move out of real estate and other asset classes, when you have a dependable non-cash asset that you can sit capital in, and you know there will never be any additional supply, and you can depend on that it's actually sitting where you say it is, more financial institutions will, view it as a superior option, or at the very least something they'll diversify into. So people are betting on, in the long term, it's eating up a larger percentage of the overall market share.
Okay, very interesting. So you kind of touched on this briefly a moment ago, but who is your typical crypto donor?
Yeah, the typical donor, and then like where the capital sits. There's a balance between these things. But yeah, the average user is late 20s, early 30s from the latest reports. Average income is 111,000, which would, despite how young they are, put them above the average income of any city in America, even Silicon Valley. Average gift size on our platform last year was a little under $11,000, and that's just because of it's a tax offset donation. People are usually giving a larger amount because they don't pay taxes on it. So that additional tax savings means they can open up to more generosity. It also means they're probably making money as investors and they're financially literate. They sit on more capital. Yeah, young, late 20s, early 30s, digitally native. A lot of people on Twitter and Reddit and Discord, kind of similar. We just did an integration with Tiltify. Some overlap with kind of gaming culture. But then also just people who write code or are working at tech companies. They're more likely to invest this way. And then there's a good amount of people. Despite that fact, it's just important to note that, like, if you're working with institutions or hedge funds, whatever else it might be, some of their capital over time, I think it's like 95% of hedge funds that have crypto or are diversifying into it, will exist in here. And even if you have 1% of your portfolio in crypto, if that's gone up more than your other assets, that's the thing you give because you have the largest tax offset. So even minimal diversification into crypto becoming more popular will mean it becomes a donation method even for people who aren't like crypto users from a cultural standpoint.
Thank you very much, Pat. Yeah.
So Pat, this is Dawn. I'd love to ask a couple additional questions, circling back around to some of the things that you discussed earlier and linking it back to how our nonprofits can use crypto to drive their future fundraising strategy. And one of the things that I heard, and I think is, and just like a light bulb moment for me went off, is that a lot of these crypto donors are younger, even though the majority, you said, were kind of baby boomers that hold it. They hold it in like mutual funds or, in some type of a stock thing that they're not cashing that out, right? That's a retirement account. It just happens to be that it's diversified into a little bit of crypto. So the people who hold crypto from an asset perspective where they can donate it is that younger generation. And so when I think about how we're trying to, all of our nonprofits typically have an aging donor population, right? Most of their traditional donors are older, and they're always trying to engage. How do we engage that new generation of donors? What I hear you saying is crypto is an amazing way to build that relationship, right? Like to build that relationship with those younger donors in a way that meets them where their interests lie. Yeah.
I mean, yes. So there's a couple layers. I've heard you've talked about this in some way. And when you and I spoke, we touched on some of the overlap. There's sort of the new donor acquisition end, which is sort of like, if this is part of your identity, the way you fundraise, you can tell a story. We've seen that works extraordinarily well. So some data points on that. We've had one nonprofit that we've ever worked with out of, not everyone does press release, but we have a little over 2,000 clients on the platform now. Only one has ever done a crypto press release, like a We Accept Crypto one, and it wasn't their best performing. It's because they had a research breakthrough. So almost always it's like the most exciting thing to be talking about for some reason. Eventually crypto will become mainstream enough to where that's not happening, and it'll definitely be worth the offset for how much capital is in it and the normalization. But for now, it's very exciting and fun. It's also like a reason for people to talk to you. So for universities, oftentimes, like they have a tough time getting very recent alumni to start their pattern of giving, and they're using crypto as a tool for that. It's a reason for them to do it because it's like, we call them high five donations, but like small crypto gifts are just a fun thing to do. It's cool to see the university is taking it. It makes you believe in the university's dependability on like accounting for the future. But then step two, like you were talking about this, but pretty much like, how do you identify crypto donors in your base? If you have young donors, who are giving you, 20 bucks a month, whatever it might be. Like if you can get a $5 Bitcoin donation from them, like that's like a golden indicator that this person might have a lot more capital than you're used to asking for. Like your other data points might tell you they're so young and they came to a walk or whatever. Like this isn't a person who has capital. But if they're sending you some Bitcoin, like they're an investor. Now all of a sudden you have this indicator that maybe you should be taking a major gift approach to potentially prospecting. And like seeing who accepts crypto to begin with and who you want to target with that message. And then once you have like that $5 gift or the big gifts in crypto, stewarding them is also separate. So like trying to maintain a relationship with those younger folks. Crypto is a reason for them to give to you versus somebody else. If I can give 100 grand to five nonprofits one year, and then crypto booms, like you'll make the decision sometimes to either give 500 grand to that one nonprofit because they're the one who's taking crypto and you get like a way bigger tax incentive to make that same transaction. Or two, we've seen this like with schools a lot. Someone goes, I'll give you 100 grand a year for the next 5 years. Bitcoin goes down and then like hits a certain level. And then they give it all this year because they want to take advantage of the tax offset. So it can mean kind of front loading gifts and getting capital through the doors faster.
Yeah. Awesome. So I want to circle back around on that a little bit and flesh it out even more just for the people that are listening and joining the webinar. One of the things that Pat, you and I talked about when we were prepping for this is the idea of, okay, if you're going to accept crypto, there's kind of 3 levels that you need to set up. There's kind of need to have, would like, is great to have, and then the next steps in the process. And we're going to be doing some follow-up emails. So if you guys are on this webinar, we're going to do some follow-ups on what these different levels are, but I would like to flesh them out a little bit here. And that is the first step is if you're going to accept crypto, obviously you need to be working with the Giving Block or someone that helps you with that crypto. And then you need to let people know and let them know on a fairly consistent basis and meet them in different places, letting them know that you're accepting crypto. So, whether it's a press release or just a good thing on different places on your website, making sure that your donors know that you're accepting crypto is critically important for a lot of those reasons you just discussed, right? Somebody who wants to give in crypto is going to look for an opportunity that with a nonprofit that accepts crypto. So that's kind of the first step we talked about was that. The second thing we talked about was, okay, we're letting everybody know that we're accepting crypto, but we'd also like to go and dig into our constituent file and maybe identify those people who are more likely to give crypto and send them out some targeted personalized messaging around that. So a couple of the data points that I heard you say were, salary over 110, 111,000, more often than not still traditionally male, although that is changing, but the traditional is that it's more male than female. They typically tend to be more digitally responsive. Also more into social networking and stuff like that. So if we can get those types of data points out through great technology, like the combination of yours and GivingDNA, we can help identify, hey, these are these people that meet this criteria. They're between 24 and 44 years old. Maybe we focus only on men, maybe we don't. Their salary levels over a certain, or their income levels are over a certain amount. They are digitally responsive, they're into social media. And oh, by the way, on top of that, GivingDNA can tell you who has been charitable in the last 12 months. Those people, ding, 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 ring kind of all of those bells to have that start to have that conversation. Is that what you guys are seeing, as well as when somebody does that and looks at those data points and then makes those personal outreaches, they tend to be more responsive to them?
Yes. So on the first layer you're talking about, like spreading the word, like something I would encourage everyone who's on this, like if you've ever been to Google Trends, if you just type in like trends.google.com, if you search like donate Bitcoin and you just compare that to searches of like donate stocks, you can put those two up against each other. Like donate Bitcoin gets searched way more than donate stocks. And that's been the case, I think, since like 2017, 2018. Like that's, again, to your point, like there's more users on the other side, but one, to your point, like people aren't transacting in stocks. It's not like a thing they interface with or think about. It's usually sitting in an account somewhere. Crypto is a much more active program. And then two, they're young. So they're digitally native. They're just online more. So like in terms of then from there, a next step, to your point, spreading the word about a press release, sharing on social, search engine optimization is super key too. So if you type in like donate Bitcoin kids or donate Bitcoin search term, you'll see like 3 or 4 of our clients will come up before even our platform, which ranks the highest for like donate crypto stuff, because we focus on like search engine optimized copy. To your point, like it's very valuable real estate to park in now while people are looking for that and do a good job with it. And then 2, to your point, mining those folks out. There's inside out and outside in. You definitely want to figure out who might have crypto and target them with crypto specific options. But it's also good to just give them very low lift, low barrier to entry ways to give you kind of those high five crypto gifts. Get them to send you like $1, $5, whatever it might be. Because if you get a bunch of people to do that, it's not about the revenue you get there, but that's a great indicator. You might have someone where you thought their giving capacity or potential like may have been lower than what you thought it was. And this could be someone who's been investing in crypto for a while. So they may have this capital that exists outside of kind of the grid of the traditional wealth engines and everything else. And you might want to try, you know, moving them up the ladder with some major gift type options and fundraising.
I love that. So basically we're taking internal and external data and then asking them to do something little that actually identifies them as a better prospective, larger donor in the future. And a lot of them are, to your point, because of their age, this age group that we're looking at, they don't have traditional wealth indicators. They don't own homes or have assets that we can find from the normal external data sources, right? And so that just becomes an extra data indicator. And then the third part of that just kind of leads on to what you just said is that then how do you build your relationship with them? What are the next steps in that process? And I found it really interesting, and it kind of goes to what we just talked about, which is that if you have somebody that even gives you $5 in crypto, you really need to cultivate that relationship more like a major donor prospect than like a $5 donor prospect. They can't just go into your annual appeal because they gave you $5 in crypto. That data indicator is really important to either throw them into some type of a mid-level program or even a major gift program, because and do that outreach at a much different level than that typical. Don't get a $5 gift from somebody or a $1 gift from somebody and then treat them like a $1 or $5 per gift.
Yeah,
correct?
No, that's it. Yeah, you nailed it. You obviously you have more sophisticated technology on like figuring out like who these people are and how they tick. But yeah, that's right. If you're getting a crypto gift from someone or indications that they're into it, you should, major gifts until proven otherwise is just a good way to approach it.
Yeah. So if anybody that's listening has either wants to start a crypto donations or is already doing them and wants to kind of enhance them, taking those kind of 3 levels, making sure that you're communicating that you're receiving crypto in a bunch of different ways so that people are aware of it. Cultivating an audience that would be more receptive to listening to crypto, and then even doing things like you mentioned, that a lot of these individuals, because they're younger people, they haven't been paying taxes for a long time, they haven't had to understand the tax literacy around, increase in wealth and stuff like that. So maybe you work with an attorney or somebody in the tax field, and you build out something that's about donations and how donations offset income when you have an asset increase, right? And so maybe that's the thing that you go out and say, hey, give me $5, and oh, by the way, here's this thing. Again, what we're trying to do is we're trying to identify those individuals who look like good mid-level and major donors. And so then at that point, the minute they do that, you cultivate them at that right level, at that mid or major level, versus saying, oh, they gave us $1 in Bitcoin. That's not somebody who gave you $1 on Giving Tuesday. It's a completely different donor.
Yeah, we do tax season campaigns. It's been weird, but nonprofits are so used to like always, impact and here's the cause and show the impact of it. Like all of that's important. Nonprofits aren't used to doing tax literacy education, but it's not just for crypto, it's for everything else. Crypto is the most volatile. So like usually the delta for someone who's been investing in crypto, some unit of crypto they've invested in has a much more extreme tax incentive than usually their stock and other investments. It doesn't mean it always outperforms every other portfolio, but whatever you're giving. So it's important, crypto, stocks, whatever else it is, but anyone who's giving to you in a major way. Like I always think it's crazy. You hear about people make like $1 million donation and it's in cash instead of non-cash. Like they're sending a wire or something. It's like, they don't have any appreciated assets they could be giving. Cause it's like, that donation is functionally, your $1 million in assets is functionally worth somewhere between $700,000 and 900, low 900s. It's like the only time it's worth actually $1 million is if you give it to a charity, because you don't pay the taxes, charity gets the full value, you get the full write-off. Like that's a pretty wild incentive. So anyone who's giving you a lot of money, if they don't know that you have non-cash options, crypto being one of them, you should definitely make sure they're aware of that and what the implications are. Like, you shouldn't depend on them to learn that somewhere else, because they might give you 1.2 million instead of $1 million, because it's functionally the same thing for their bottom line, because you just unlocked the tax incentive.
Right, right. Because now that 200,000 that they were going to have to pay in taxes, they don't have to pay because they're transferring versus using cash. I love that. I think, there's always this kind of shoulder time after the end of the year where we've got our end of the year appeal, and, everybody's like, running. And then donations a lot of times will really fall off. And so when you think about from a campaign calendar, even, that, what do you do for spring? We have these different incentives, different times a year. Maybe we start to kind of foster that as an industry, that you start to have conversations around this, and maybe that builds up that springtime giving that traditionally isn't really robust.
Yeah, 100%. I mean, it's the nonprofit should be partnering with tax advisors and other folks who explain concepts. It's just like, either A, they were going to give you a certain amount of money over a certain period of time, and now they're going to give it all up front because they have something that's super appreciated, or at some point in the future, they'll give you a larger gift size or an earlier large gift, because if they're looking at that tax incentive as a trigger, like the upside to that as a nonprofit is so high.
Awesome. Well, great conversation. I'm going to open it back up, Leah. We've got about 5 minutes left for some Q&A. So I'm not sure who's handling that, but let's just go ahead and hit on some of that.
Yeah, I'll take it over from here. I've got a couple more slides that I'm just going to flash forward before we go to the Q&A, which, by the way, I thought it would be the case, but it definitely has been. There's a ton of questions in the Q&A that Dan has done a great job of answering, but I think I will skim through and pick out a couple where I'm seeing some common themes. So Pat, really quickly, we had a slide here about like how to accept crypto donations. If you want to know more about this, I'll leave the slide up for a few seconds while I'm speaking, but the Giving Block is a great organization. If you want to learn more about how to accept crypto, they have a ton of information on their website that you can go and check out and learn more about this and do some of your own research. But it's the simple answer is setting that up on your website and adding the button. Pat, is there anything quick you would like to add here before we go forward?
Yeah, I mean, if you click accept, if you go to the givingblock.com, if you click the accept crypto button in the corner there's a form you can fill out to get a demo of the actual product. So it just shows you like how the actual payment flow works, the dashboard, and then, it's an expert who then walks you through any questions you have about like the setup of the solutioning and then the fundraising aspects of it. But that's the main starting point, making sure you understand the system, how it works, and have it explained to you, and then getting basic questions answered.
Yep, perfect. Thank you so much. Quick note to everybody. I want to go back. Went too quickly. Quick note here, we are going to be having a post-webinar survey. So before we go to the Q&A, just wanted to let everybody know that if you can hang on for a few extra minutes, I think the survey will take like a minute to fill out. We just want to make sure that we are continuing to deliver you guys content that you want to learn about, and that it's delivered in a way that is valuable to you. So just keep an eye out for that after we wrap up today. We also have a free resource for you from the Giving Block. The QR code will take you there, and these slides will be shared out after the presentation today. So if you don't have a chance to snag that picture of that QR code before we go to the next slide, you will be getting that in your inbox with the recording tomorrow. Another free resource we would like to put in front of you is Optimize Your Donor Pipeline. Some of the concepts when it comes to kind of looking at your donor data to identify people who might be good candidates and potential crypto holders. There are some different data points that you can unlock through technology, and this resource kind of walks through some different ways you could do that. All right, so now to our Q&A.
Sweet. Can I just, let's jump into the Q&A.
Jump right in.
No, I was just going to say, for folks who are on the line, throw your questions in. If you all want to send me over anything we can't get to today, just so people don't think we're going to butt up against time, won't answer it, we can write out answers to anything they all throw in. So if you're on here and you're typing and think we won't get to you, just throw those in. We'll answer literally everything you guys pile in.
Absolutely, yes. So one question that I've seen some people kind of asking in a few different ways is kind of given the current the current bear market that we're looking at, and even some recent news coming out about inflation and looking at potential recession, is now a good time to advertise that you're accepting crypto?
Definitely. Yeah. So we're not, donation volume isn't growing as fast as we thought it would this year, just because we predicted it during a bull market last year. But so far, we're a little over 300% higher than we were at this point last year. So in short, the tax literacy gap, and then like the growth of our fundraising practices, campaigns, match dollars, more companies building out CSR programs in the crypto space. There's just so much of the land is not grabbed and tapped into. And then because the market, again, is volatile, like if you bought crypto 2 years ago, you're still way up on the investment. It means the majority of crypto users are still up on their investments in crypto, even though some investors bought like a bunch at the top who are feeling it. It's still, tens of millions of people with an enormous tax incentive to give. And a lot of them are still just coming online for the first time. So what I would say is like, it depends on what kind of nonprofit you are and how you fundraise, but almost always it's better to build a program in a bear market. The lines to NFT artists, if you want to like start forming relationships and do auctions that benefit your charity, have never been shorter. Corporate partners, same thing. In a bull market, it's very hard to lock in a new partnership or earn a new donor and like beat out other nonprofits who all kind of crash in at the same time. It's very similar to investor behaviors. A lot of people want to buy stuff only if it's been going up for a while, which is usually not the time to throw all your money into something. Nonprofits do the same thing with non-cash asset giving. They try to get started during a bull market. Usually the charities who build during a bear market have a much larger Rolodex of donors. They understand the best practices and they just reap a lot more of what they sow.
Mm-hmm. Yeah. This is I've seen a few questions come in, and I think we need to clarify something, which is when someone donates crypto, are they donating the actual, cryptocurrency itself, or is it liquidated? Is it cashed out essentially first before it goes into that nonprofit's account?
Yeah. For the donor, they have to give the crypto directly. For the nonprofit, they don't have to interface with it at all. So pretty much it's an account that's opened in the nonprofit's name, and it's formally tied to the 501c3, your EIN, so that a donor can go to the IRS and go, hey, I gave this crypto to a nonprofit directly and verifiably. So they get their tax incentive. If you gave it to your friend gave it, like then you break the chain. It's called a taxable event. So that happens. But as far as the nonprofit's concerned, the way we set it up is there's a program that automatically sells when it hits the account. Think about if we set you up with a Fidelity account that was set to where if there are any shares of any stock existing in this account at any point in time, sell them immediately for the value of those shares at that moment. That's what the program does. And then once a week, we just push the USD value over to the nonprofit's bank that's linked.
Yep. Thank you for explaining that. I know there's a little confusion about it. Another question that kind of sums up a few people's kinds of questions was, there's kind of a part A and part B. And so part A of the question is, what is about the percentage of the total people who give cryptocurrency? What percentage of them are anonymous versus actually give their name? And then the second part of that is, given the fact that many crypto donations are anonymous, what are the best ways to show gratitude towards those donors?
Yeah. Again, the anonymity thing is totally up to the nonprofit. So if you want to make a donor give you their info before they send you a gift, you can do that. It obviously adds friction and some people will drop, but it's the answer is it's identical to every other donation method as far as we can tell. So like Facebook, for instance, lets people give without sharing their info. Same percentage. It's usually like 70% will go for that option. We get the same percentage on our platform of donors who prefer that. You can obviously remove that preference. You'll get more donor information. You'll probably end up with less revenue upfront, but you're exchanging that for having more dependable donor information to steward down the road. It's the same analysis you would do as a nonprofit for any other giving method. And then in terms of showing gratitude, it's actually kind of ties into this. Because people give anonymously, a lot of people go to social and they're like, someone gave us, 130 grand in X cryptocurrency. This is so exciting and fun, because they, instead of sending that one-on-one email. And what that does is people who like crypto and like your organization engage with that content. They get excited. They tell a story. And it leads to the cycle of kind of promoting your crypto acceptance and fundraising as its own vertical on your social channels. And you develop an audience that's interested in that content specifically. Usually it generates more engagement. American Cancer Society is a good example. Their second best performing tweet. Again, all of our stats are like almost close to being perfect, but their second best performing tweet ever is when we formatted a tweet for them to announce they were accepting Doge when that was like in vogue. It was a meme cryptocurrency at the time. I got something like 12,000 retweets or something insane. So then, of course, the leadership was like, we got to go all in on Doge. We were like, no, it's fine, it's good. Everyone's paying attention, but we'll stick with the game plan.
Yeah, for sure. I had one, speaking of leadership, you know, any kind of new asset class, way to donate, way to give can be a little scary. And nonprofit boards, you know, typically are a little bit more conservative. So how could someone who works for a nonprofit who is really has a compelling case for accepting cryptocurrency, how can they kind of make that case with their leadership?
Yeah, this is another important point tying back to that. Like if you click accept crypto and like talk to an expert who does those conversations professionally, like even if you don't end up working with us, that's the most valuable thing you can do. Like we have 15 people who are paid full time to teach you how to navigate that in a way that like helps you work with us, because that's their incentive. You can use all of the bullet points for arguing for our technical solution would apply to any direction you want to go for accepting crypto. Our fundraising outcomes, like we'll obviously make cases for why the majority of nonprofits choose us. But that's the best thing you can do. Just ask the expert, how do you have a board conversation? I can give you some answers, but it's very dependent on who you are, what the organization is like, what your position is at the organization. Is the board progressive? Are they very conservative? Are you doing just crypto acceptance? Are you going to be running capital campaigns that are crypto specific? It really depends on what you're asking for and along what timeline, and then like the dynamics at your organization. But I would, just sit down with someone who formally gives you bullet points in an email and documents and case studies and statistics, and they can just load you up with everything to make that case.
Awesome. One final question, and I think we have to wrap up. And again, thank you everybody who's putting your questions in. We'll be sharing this with Pat, and we will be probably finding a way to kind of get all the big questions answered, maybe publicly, because I think that would be a really valuable kind of resource to share back with everybody. So we'll work on that. But one final question, and it has to do with something you mentioned earlier about the environmental impact of crypto, and it being kind of similar to the environmental impact that banking and stock trading kind of has. But an individual who works for a environmental nonprofit, how do they want to know, how do you communicate that with donors? Because it would seem a shame to miss out on the opportunity to accept crypto donations if that's really lucrative. But on the other hand, if there are concerns about it that might conflict with their interests as a nonprofit, how do they navigate that?
Yeah, there's two parts to this. Also, I apologize that we won't get to one or two additional questions because I came in late. I thought this thing started 10 minutes later. But yeah, on this question, there's two things. It's either you are willing to argue or you're not. So like if you're willing to argue, a lot of our growth, one of our biggest growth in terms of the charities we serve has been in environmental orgs, because it's a great opportunity. Like these crypto companies, they're buying up every NBA and football stadium, like they're sponsoring every Super Bowl ad. Like these are companies that are kind of taking over like during the tech boom. And there's a lot of environmental fear, uncertainty, and doubt around the tech that gets into the news. Like these companies, these individuals, there's a huge incentive to partner with environmental orgs and try to offset how much energy it takes up, which happens a ton now. So a lot of nonprofits understand it's like the individual energy impact of one gift that we accept of $111,000. Obviously, the work that we do with that money is infinitely times over, like better for the environment than whatever the environmental impact of that transaction is. So the argument on paper is true that if you're an environmental org, it's the easiest case ever, because unless you're very bad at what you do, then of course what you do with the money you receive is the offset, and should be the offset by a dramatic margin. Like obviously any transaction you receive should be producing more good than whatever harm it causes, and that fund is going to go somewhere else otherwise. So that should be true. But now let's say you don't want to have that argument. We've been having this argument now for months as it's become more popular. We're just going to do not only an offset, but we're going to double the offset. So it's a net positive every time a donation comes through our platform. So we're going to call it like TGB green or something to that effect. And it's going to be like cents to do each time. The environmental impact for these large transactions is dramatically lower than people think it is. And that'll plug the gap, because we've been having arguments about it, but like being right is not enough to win an argument. And it's like, even if you believe, you know, XYZ actually equals X amount of environmental impacts. Like there's no reason for nonprofits to be ending up in a position where they're trying to like argue with a donor who wants to support them because they understand those statistics differently. So hopefully, I mean, I don't want to put my foot in my mouth, but like a month from now or something, we'll be able to launch that. And it's relatively inexpensive to do as an offset. And then that'll just be the end of that. Every gift that goes to our platform will be a net environmental impact, plus whatever positive you all do as the environmental org.
Awesome. Well, everybody, thank you so much for joining us today. I know we were a little bit of a late start, but we have had an amazing conversation and dialogue today. And just thank everybody for your questions and for tuning in. We are hoping to offer another webinar on this topic featuring a client. And so if that comes together, we will be definitely sending an invite to all of you and welcome you to come attend that. And please do check out GivingDNA, check out the Giving blog. We'd love to have a conversation with you to help you identify folks in your file who are likely crypto holders and then engage them in giving to you through this very exciting way to give. So Pat, thank you so much for your time today. Really appreciate it.
Yeah, thank you. Sorry for being late. Thank you, Dawn.
No worries.
Thank you,
It's all
Nicholas.
good.